Jordanian trade unions are going ahead with the strike to protest against a new draft tax law despite efforts by King Abdullah to diffuse public anger. The country's seen its largest protests in years over the new tax laws, on the back of rises in the general sales tax and the ending of bread subsidies earlier this year. Shopkeepers worry they won't be able to replenish their shelves once their current stock is gone. The government's price rises mean that this grocer, like many others, has seen costs mushroom. The government and its failed policies, they keep raising prices without real studies. All they care about is bringing down debt or the budget. How long will the citizens be able to put up with this? I've owned this shop for 10 years. In a couple of months, I'll be sitting at home. The government's plans to raise taxes are part of reforms driven by the International Monetary Fund aimed at lowering Jordan's $37 billion debt. Here are a few measures under the proposed tax reform. Reforms could double the tax base from 5 to 10% of the population, and taxable income will begin at lower levels, and other tax exemptions will be scrapped. Many protesters are young, and even the qualified ones complain of struggling to pay their bills, find jobs, or build a future in Jordan's sluggish economy. GDP growth at 2% for 2017 is barely enough to keep pace with the rising population. Unemployment hit 18.4% in the first quarter, while inflation was at 4.6% in April. Jordan and the IMF have a 3-year plan in action. The government argues the reforms will reduce social disparities by placing a heavier burden on high earners. The country last saw domestic unrest in 2012, when the IMF raised fuel prices.